this was like my entry or something, and this was my liquidation price. And this was the liquidation price, I think, of my whole account. And just because of the liquidation engine or setting that I had set up, this wick did not take me out. But as soon as we reached back even, I was like, okay, I'm out. I am taking a break. I need to figure out what I am doing. I need to figure out a system. And ever since sort of around March 2022 to now, March 2022 to, I would probably say July 2022 is where I just sort of developed that system that keeps me in check.
All right, Max, we are live with the legendary Hen. Hen is a more down low crypto trader, lurking CT, but he's achieved some pretty incredible things. One thing that I think is really neat about Hen is he's outperformed Bitcoin since late 2022, which I can guarantee a lot of other traders have not, meaning that his portfolio is up more than 400%. And he's a fascinating trader who trades super high time frame trends. He builds a lot of his own custom indicators and diagnostics, and we're lucky enough to have him on today. So, Hen, thanks for being here.
Thanks for being here, Hen.
I'm excited and nervous at the same time.
Totally fine.
We will guide you through this. So
love it. Can you see that?
Yeah, we can see it.
So I always remember that this here was when Russia-Ukraine started, just because that is.
Mm-hmm. So you're saying Russia-Ukraine deprived us of that third drive up?
I mean, maybe.
The third drive that was promised and stolen.
It's promised and stolen.
Yeah, I was definitely, I think, in that stage. It was like this end of the buying the top. That's when I was really hoping that we would go back. And yeah, that was when I was promised 100K. Was around here by everybody that I was following at the time. My story with, I think, Bitcoin is the place to start. Was really sort of hearing about it probably around 17. I presume it was close to the top. I have no idea. But I just remember putting a small amount in, and that's when I discovered all of the sort of hardware wallets or hard wallets, and having these things saved on like paper and all these QR codes and all this other kind of stuff. And I thought that was just really interesting, and I just thought, well, let's just put some money in and whatever, and completely forgot about it. Didn't even look at charts, didn't know what charting was, and then rediscovered it probably when it started hitting the like COVID highs.
Oh, did you have your wallet?
I still had it. I had to go back and find the external hard drive that I had it on. And when I checked, I was like, oh, I'm up like 2-3x. I could go out for a nice dinner kind of thing. And I sold it immediately. So I can say that I sold the top here.
One of the few.
Which means nothing. Which means absolutely nothing. And I think at that time, I thought to myself, and I think a lot of, millennial people were in a different generation where we're not as fortunate as previous. And this seemed to me like, okay, well, if I can learn something in this space, this could be a good chance to create an easier sort of financial situation for myself. So I would say this is where I really started taking more of an interest in it. And then this here was a huge learning experience for me. I went through so many different techniques, I suppose, is the best way to describe it. That's when I thought sort of Cardano was going to be the next big thing. And there was a YouTube video, and he would talk about like Wyckoff accumulation. And right here is where I sort of started learning about like trend breakouts, and like inside outside candles was probably the biggest thing that I learned here. And I think I did end up very naively, I think, because I would never probably do the same thing again, but sort of buying a lot of these wicks just because I was like, this guy's correct. He's 100%, this is going to make me money. To note, he is no longer trading the space. And I think
we lost
around
a lot
here,
of good men out there.
yeah. And I think this is where there was, it was like Buster Rhymes or something had some tweet about buying Bitcoin. And this was there was some Bitcoin conference or Elon Musk interview or something that sort of started sending price back up, which I think we now think is like the FTX.
Was that the Elon Musk, the SNL thing?
No, he was up here, I think.
That was he was a top signal, yeah.
This was some sort of like, I can't remember what it was, but it was some sort of announcement. So I had like DCA buys here, maybe like low. Can you see this here?
And one thing for the viewers that are watching, Buster Rhymes is like this cycle's Scottie Pippen. So it's same but different. History repeats itself.
Was he posting up here?
No. Scottie Pippen is posting now, or he was.
Oh yeah, but was Buster Rhymes posting when he was up here?
No. But you were saying he was posting at the bottoms to buy the dip.
He was
saying that he saw Satoshi in a dream, and
did he
say Satoshi that? Told him to buy. Well, Scottie Pippen said that.
Oh god.
So I had like low 30 buys, and I was very happy with myself when we sent it up here. I was like, this is amazing. This is super easy. Like it's going to 100K. I don't know why I didn't do this beforehand. And I think I was all in Bitcoin or something along those lines. And then we had this drop off and I just crumbled. I was like, oh my God, this volatility. I have just lost like 20% of everything. Like I just didn't know what to do. I was almost paralyzed with.
So you were all in basically. You were.
Oh yeah.
You were 100%. Fully exposed. Got it.
Yeah. That
hurts.
Without a doubt.
Yeah.
Without a doubt. I think, and I don't remember. I think the trauma of consistent being in this space has overwritten a lot of things. But I remember buying, and I was still in up to the top. Here, I remember telling somebody at work, I was like, well, Bitcoin just broke all-time high again. And that was literally the top. My confidence rose with price. And I think I just consistently just kept thinking, nope, we're going to go back up. This is just another dip. This is just another dip. It's fine. We're going to keep going. And I think here is where I started thinking, oh, shit. I don't have a plan.
Not.
I don't have a plan, basically.
Quick question. Was it like, did you actively traded the chart or was it like you spot invested? Because you sold the initial top, right? From your initial investment. Luckily. That sparked your interest in crypto. Yeah. And then you niched down on YouTube channels and looked into the space, inside out candles, that kind of stuff. And you bought back into it at the bottom, which was a great buy here, right?
In retrospect, yes.
But
yeah, I suppose I was getting into it. I was thinking, okay, like I am not a unintelligent person. I can maybe transfer these skills to this. But emotionally, I was probably checking the charts every 10 minutes or something during the day. Like it would be a constant thought process, and it just overtook everything that I was doing in life. And I think I've got a few tweets at that time. I was like, I most definitely developed some sort of gambling addiction because I was just my emotions mirrored the charts.
Yeah.
If we were down, I would be like stressed and checking the charts. If we were up, like even just daily life, like I'd be so happy. And I think I discovered, and I think, that ties us together is Trader Mercury's group. And I kind of just took myself out of the market here and just thought I need to reassess my situation. Like, this is not sustainable. I'm never going to be, like, I can't keep living my life like this. I either need to just leave and just not do this at all,
Mm-hmm.
or I need to create some sort of sustainable way of making money or being in this space. And that's sort of what started taking me to what I would consider higher time frames than most people, even though for me, and I think sort of the average person on the street, it's not. And that's where I sort of started really, I suppose, refining my system of what I use, or at least the timeframes that I use, and basing systems around those timeframes in sort of this period here. And that's where I started reading a fair bit more on just sort of different styles, playing with indicators constantly. I was probably at my screen for so long during that bear market, just looking at other Twitter accounts on CT like DGen Spartan, Pentoshi, Foo, all these sort of bigger accounts, and seeing sort of what they had done. And I think Trader Mercury has been so good in terms of the psychology of all of that. And that's probably the biggest thing that I've taken away from him. And that's one of the biggest things that I could recommend to anybody starting. Like, I have friends who are interested in it, and I say, you need to join this group and you just need to learn this, even if it's not the system that you end up using, because it's not the system that I use now, but the mentality behind it was so important, and it just sort of started changing everything. And it was definitely like the biggest and best first step. There's so much more to learn, and there's so much more that I've learned through this cycle. Like, I have not played this cycle perfectly, and I've learned things from like separate drives that we've had through each of the years of this bull market. But being in a position where I am not thinking about the charts 24/7, I'm living my life and still being successful. Maybe not to like peak success, but to me, being able to take something away from this market is like the standard. And if you can do that, then you're successful. It doesn't matter if someone trades more than you, or takes more trades than you, or makes more money than you, etc. Like, so long as you're enjoying it and it's not ruining your life, I think the longevity in this just dictates that you will be successful.
Yeah, thank you. Well, it's pretty interesting because you joined back into the market at the pretty much first top, then righted up this second top, and then stuck around in the space for the worst part of this bull market, right?
Yeah, I mean, I lost everything. Like,
yeah.
I lost everything around here, and I still have one trade that I remember I was like over leveraged on Bitcoin here. I think GCR sent some sort of religious tweet, and I took that as like, this is the holy bottom. This guy who is worth millions is going to save us all, and he's giving us this secret to like insider information. And I have it somewhere, but it's like, and that was the one that oh, here it is. Let me see if I can post it onto the.
We will get the third leg higher to 100K, right?
Yeah, so this was the
you have
trade. Oh yeah. I have so many things saved. This was the trade. This was the trade that I had. I think this was like my entry or something, and this was my liquidation price. And this was the liquidation price, I think, of my whole account. And just because of the liquidation engine or setting that I had set up, this wick did not take me out. But as soon as we reached back even, I was like, okay, I'm out. I am taking a break. I need to figure out what I am doing. I need to figure out a system. And ever since sort of around March 2022 to now, March 2022 to, I would probably say, July 2022 is where I just sort of developed that system that keeps me in check. But I have this saved, and it just reminds me, like, you can just look at it, look at the time frame, 5 minutes. Like, I am never doing that again. No. Like 12-hour chart is like the lowest, maybe I'll delve into the 6 hour if I just want like a little bit of like scaling assumptions into a 12 hour, but 12 hours like my sweet spot really in what I trade now.
That was just so funny right at the moment because you're just pulling up the chart from 4 years ago like it's nothing. When talk about journaling, this is like how you should have prepared your trades in the first place.
Yeah, 100%. I have so many and that was a lot of what I did. I had screenshots upon screenshots of what people, and I'll be able to like post those in because I have my notes app set up just on my other screen, so I'll be able to like post all of those
that's cool.
in. And I think that's probably the more like important things that I've learned rather than even like the indicators or what I use now. Like just all of that information is so useful.
I have one important question for you. Before Computer Brain, I think wants also to ask something.
No, you go first. He just dropped a lot of alpha, and I want to make sure everyone that was listening picked up on it.
But one thing that's just in my mind at the moment is after all that failure and the worst part of this bull market where you came in and basically got annihilated by the market and were new to all of this and just started trading, what made you stick around? Like, why are you still here after all that? And
because I don't fail at things.
Yeah,
I've always believed that it's just about the amount of work that you can put in. Like no one is special. You can just like it's just literally how much you work, how much time you put in. I think obviously there's sports and a lot of other things where there is a lot of genetic physical ability, and that's completely different. But anything that I think requires time, effort, or education and those kind of things, which I think trading is a lot of, and just learning about yourself as well, I was like, no, like this is not something that I am failing at. Like this will be a skill that I can transfer even to sort of the regular markets, my like retirement accounts, all that kind of things. I was like, no, that I'm not failing at this. This is not the first thing that I'm failing at.
You wouldn't believe it, but I think it's pretty unique to have that will to stay here and not fail and just educate yourself, go through it, and are still here and successfully have a portfolio in place where you are now up a lot from the start of the recent bull market. So congratulations to sticking around because it's like you've gone through the first cycle emotional roller coaster at the Pico top and are still here and learned a lot, I think. And
100%. Yeah, definitely.
It's amazing. I mean, like, I think that a few things really stand out to me. The fact that a lot of people would reflect after going to zero or, at the bottom of the bear market saying, oh, I think I actually need to make a change. But like, you kind of realized before things were, I would say, definitively in a bear market that you needed to make a change, reflect. Instead of over trading, you decided to get out of the market and study it. And I think sets you apart in a lot of different ways. The other two things that were, I think, alpha that you said that people need to pick up on is the fact that you saved a trade from late 2021 and you still have it readily available. Whoever's watching this, if you're not journaling every single trade like Hen is, where you're taking screenshots, you're writing down how you felt, you're writing down why'd you get in the trade, why'd you get out of the trade, all those technical indicators that you might be looking at, like you're not going to make it. You need to be recording and reflecting and meditating on everything you do because that's how you get better. Like obviously when you start out trading, you're the worst version of yourself. You're the worst trader you'll ever be at the beginning. And the fastest way to improve is to journal and reflect. So I think what Hen is doing is awesome.
I showed some other things that I made during the bear market as well. This little meme to remind myself.
Some of these are great.
Oh yeah. I mean, when you look back on it now, you can laugh. But at the time, it was like making them with tears.
You made that?
And then, yeah. And then trader Tom Dante, I think his name is. Yeah. So he had like a demon finder. And so this was like mine, and you can just see like the absolute abuse that I was just giving myself for like the trades that I was taking, the impatience that I had, and
Demon Fighter is a great name. I need to steal that.
He has I don't think I have it on me now because I don't use it too much. I like to think that I have gotten away from that, but it was basically like you identify the weaknesses. For me, a lot of it was not waiting until, say, like candle closes was probably the biggest thing, and being impatient. And his whole thing was, if you tick these off and you get to 10, you're done. Like, but you just you're not learning, you're not improving.
Yeah.
So, yeah.
And it's a good way because you frequently stack up the same errors and people don't realize 100%.
That. Oh, yeah. Yeah,
I've done 100%. This too. Mine are a little different, but yeah.
Yeah, like I even think I included one thing one time where there's some indicator where you can like make a candle invisible or something until it closes. Like I tried that, and then I just got to the point where I would just now, not for this podcast, but like my Trading View and like Discord are now just blocked for like the day. And so it makes that discipline aspect of it so much easier. And that's sort of something that I incorporated from just sort of what I've done in life and what I use in life. So now it's not even like a struggle. It's just, oh, well, I can't check it now. I'll check it come the close.
We should definitely talk about that. So I think that's something that a lot of traders, when they're starting out especially, but even when they're, more seasoned, they have that error of over trading and wasting time staring at charts when there's nothing productive to be done. I guess explain to us how your style developed from taking those 5-minute, time frame trades to how you're trading now, and also how you were able to find balance. Because I think one of the unique things about you is that you are incredibly disciplined. You're not staring at charts all day. You have a very impressive job actually outside of crypto, and but you still manage to outperform Bitcoin. So I think this is the alpha that people want to hear.
Yeah, so I trade the 12 hour charts, and the main reason that is because of this tweet here. And when I started developing it, I looked into the trends that were possible, or the trends that happened in this space, and kind of realized that I don't need to be checking the charts every hour. Like, from what it looked like from previous cycles, obviously I'm going to sort of be talking about a mindset that was before this cycle, was that trades you'd be holding for weeks to months, these kind of things. So, and then when I reflected on the 2021 top, it wasn't like you had a specific hour or even day to sort of sell prices close to the top. So to me, it was like, okay, well, I can check that once a day, but what is better than once a day? Twice a day. So,
so you gave yourself a little grace. You're like, all right, I can't be a monk, but like, all right, I'll just check it twice.
For me, it was just twice. It just kept like a nice routine of, I'll check it in the morning, and then I'll check it in the evening. So sort of those 12 hour, and then sort of the daily close. And I just realized that a lot of the volatility that happened, if I just wasn't paying attention to the chart at that time, it wouldn't affect me. The final candlestick effectively is going to tell a story. And I think this tweet here about people who check prices excessively, it just has stuck with me. Like, this tweet is from, I don't know, like 2020 or something along those lines. And when I was working out systems, and I would just see like, oh yeah, I probably would have solved that one. Like if I was checking things consistently, like say even just on this chart, for example, like this wick maybe below this cloud, maybe I would have solved that if I was checking it consistently, because one of the problems that I had was that patience and not waiting until the close of those candlesticks, just in the way that I trade. So for me, just like blocking the charts at that time and then just rechecking it, it's kind of like, okay, well, now I can see the story of the day and see how that developed. And the other main reason was a book that I read called Fooled by Randomness.
Great
so
book.
I took one of the charts.
Long book. I love this book, I think, but it's good.
I think you can read that once, and then if you read it again, you can kind of summarize the book into maybe like 5 to 10 pages, like what you would end up taking away. So I don't read the full book anymore. But it has this really nice chart that I've obviously edited.
Dude, I love all your graphics. This is great.
Oh, yeah.
And this is unique. This is unique. Many people don't do this. If you're watching this, start having an archive for these kind of charts, these kind of setups, these kind of tweets that really made a significant impact on your trading style, and remind yourself on that stuff. That what you do here and pull out one by one. I'm very impressed on it, because now the picture gets clear to me why you are now so calm and could develop within one cycle a so good technique in handling that emotional roller coaster which these markets provide, because you
helped.
put in the work and you remember the stuff.
Yeah, and I think now I don't really check them as much. But definitely at the start, I would almost, like, I developed the routine of, I would like read this stuff first, then I would check the charts. I would make my, I suppose, decision for that 12-hour time frame, and then I would maybe check Twitter. And I think one of the things that I used to do beforehand, when it was a lot more of an emotional thing, is I would check Twitter first. And I would almost look for other people's opinions to guide my own. So whereas now, and I think a lot of experience comes with that, but now, like, I don't really care if other people have opposing views. But yeah, so this table, which I've obviously edited, basically just talked about the lower time frame that you're on, the more variance you are exposed to. And that book, I think, talks really well about sort of a negative versus a positive experience, and how we as humans, it's 2 or 3 or something like that times the reaction in a negative experience versus a positive one. And I think the chart on the bottom sort of shows that, you know, if you're not checking things as often, you are better understanding and flowing with the overall trend. So for me, for example, I will only check the charts twice a day. And in terms of my overall, just even portfolio, I have on the central exchanges, decentralized exchanges, you can turn off what your portfolio is. I have that all turned off. So even if I check, say, like Binance or Coinbase or something along those lines, it's just a bunch of asterisks next to what that is worth at the time. So for me, that plays no impact into what I'm doing at all. So I will just check my portfolio every month. And that's something that has also really, really helped. And I'm going to be like the copying and paste kind of guy, but there was this one chart that someone made. I can't remember who, but I just put it together, and it just talked about how, like, I think it just sums it up so perfectly. Like,
Can you
if
make
you
it
become,
bigger?
yes.
And can you move the black box?
Oh, this thing? Yeah, so I didn't realize you could see that. I'll move that to the corner. Let me delete this.
And sorry, before you delete the other one, can you just go back to the other graphic? What does it say in the rectangle? Pain and trigger.
So that is from Trader SC. I think it's his banner.
Yeah.
So it says plan, waiting, trigger, and the waiting part this is where you fuck up.
Yeah.
Mm-hmm.
That is true.
So, and then for me, it was kind of like, that's why I check it twice a day. Like, it's super simple, very left curve. But if I'm checking the chart 1 hour, if I'm checking it every minute, and that's sort of where it also comes back to that like emotional roller coaster that I went through in the market initially, and even that sort of 5-minute chart that I showed you, that is the emotions that you go through. And you could be riding an uptrend, but you're selling every dip and things along those lines. So for me, it just shows that like there's a greater probability of my success if I'm not checking the chart twice a day. And it's sort of this seemingly consistent message that these books and these traders on CT have shown. So all of that like coming together sort of really helped me be like, okay, well, I need to start working on a system that matches that psychology, that allows me to do that and give me the best chance of success.
So wise.
Seemingly, in retrospect, yes.
I love it.
But yeah, I like this one. So it's like your portfolio is completely unknown, and then as soon as you sell, you just sell, and you're happy with what you got, rather than. And I think GCR has a really good thing about expunge your mind of your peak net worth, and that just really helped me as well. And that was sort of what the 12-hour trend 1 month returns kind of sums up in a way for me, and that's sort of the style that I have got into.
Yeah. It makes a lot of sense. If you don't see your portfolio, your ego gets never really triggered, because the problem is when portfolio rises, you have like your expectations also rise with the portfolio value. Your dreams are not the dreams that you had at the beginning, because also they will grow because you recognize what is possible in this market, and then you fuck up. And then you go in an even heavier emotional roller coaster if this fluctuates heavier as the market, if you use leverage, for example. I experienced that.
I think everyone has. I think I obviously definitely have.
Yeah, you did. You came into the market as said at the worst place, and you kept going. And I think that are these moments, and these are techniques to get out of this emotional roller coaster and get into discipline and getting into being a successful market participant. And as said, these moments makes a difference. I can only remember, like in small scale and in big scale. I can remember a friend of mine joined the space trading crypto, and we had a chat about trading. And I said, yeah, you buy trend reclaims and you sell as soon as the trend is lost. He was like, yeah, easy. I will like deposit 10K, easy, I will do this. 1 week later, he came back to me and said, yeah, I did shit. I lost it all. Like, I fucked up so bad. He went quiet for 2 weeks. I wrote him, I heard nothing. But he also has that genes where he is like, he's not giving up. So after these 2 weeks, he wrote me a message. So, okay, I reviewed everything I did, and I think I thought it is easier as it is, and I need to control my emotions. And I'm now also in Mercury's group. Like, I'm starting to learn this shit now and build my portfolio back. And he's back now. Like, he got his initial back, and worked his way out of this. And I think, like, as said, in the small scale with small losses or bigger losses, the market tests you. There are certain moments, if it's a whole downtrend and a whole bear market or smaller losses, that tests you, and then it's up to you if you keep hanging around here and learn through these images, through these pictures, through that abstraction of thoughts, and really grow out of it, or you leave, right?
Yeah, I think and sort of I have a whole, and it's something that I thought even after this, I'll probably end up posting it as like a thread or a link or whatever afterwards. But it's like every single aspect of being in this space or trading or like whatever you want to call it, there is some sort of emotional aspect to it. And I think Trader Mercury always talks about, there's always a fear to be had. And once you have accepted that in a way, and you sort of know that you have a plan in case you're wrong, there is somewhat of a peace and acceptance with it all. And that's where I suppose when you see the accounts that end up either shit posting or dunking on themselves, you can kind of understand that those people have achieved that sort of next level of, they know that maybe that time the trade didn't go against them, but if they stick around, they will be successful.
Mm-hmm. That's true. So, should we deep dive a bit into your current trading style? You said you use the 12-hour at the moment and check the chart twice a day. But what is really then makes the trigger for you to really de-risk or go risk on again in the market? As we previously spoke before this interview, you said you're pretty much on the sidelines watching this market at the moment.
Right now I am, yes. I mean, for me, it's kind of like, I think at the moment it's 2 time frames that I will use. And right now that is just the 12-hour and the daily. So it's almost like what I would consider the 12 hours like your trading time frame. I'll take trades based on that. And then the daily more as a high time frame, giving context to a lot of that. So if, for example, so like if I move to the daily, I can see that we are below the cloud, which we can get into either next or a little bit later. So for me, it's like, okay, well, everything comes now with some sort of a bearish tone. The expectation would be that even if the 12-hour flips bullish and all of the signals are up, there is an inherent limitation to that upside. Whereas when the daily is sort of I use the super trend. So as soon as that has flipped bullish, and the Hull moving average that I'm using at the moment is price is either above it or it is trending upwards, which is shown by the blue color change. To me, there is no limit to where we can go. So for me, in those instances, any 12-hour trigger in that instance, I am not all in, but all in. I have no reservation. I have no sort of preconceived limitations of where price may go. I will just be riding that till complete exhaustion. And the way that I actually developed the system was over a few tweets, and I don't follow him anymore, which may be a bit blasphemous to say.
Thank you for your system and goodbye.
Somewhat, but it's more of to do with I needed at the time to keep my Twitter as not clean, but just as noise free as possible. And the thing was that he kind of uses Twitter kind of like I do now, and there's a lot more to it. And he posts a lot more about other things. And for me, it's just like that's not what I was using things for. And it was this. It was your only job is to find alts in S1 and not sell in the middle of S2. And to me, that is like the cornerstone of how I trade. So I am not a one buy kind of person. I probably have about 3 or 4 potential triggers to either enter or add to a position. And a lot of that is based on, again, the psychology behind it all. And there's a quote that Kobe became famous for, but it's actually Larry Williams from How I Lost $1 Million Last Year Trading Commodities. And his basic thing was, we try and make money too quickly and we try and preserve it too slowly. So for me, I have 3 or 4 different ways that I will enter a position and 2 ways that I will exit a position. So I'm entering, let's just say, like a full position is 1. I'm entering in thirds or quarters for a position, but I am exiting quickly. I'm exiting in like 50% and then the other 50%. So that is a lot of the things that started what I developed, I suppose, into my own system. And the biggest things were, again, Ansem talking about the Ichimoku clouds. And he posted that, and that was something that I liked because I would spend, and I think I sort of demonstrated that, I would spend a lot of time.
The black box so you can read the thing.
I would spend a lot of time just staring at the charts and wondering, where is this going to go next? What if it goes up? What if it goes down? And when I started developing or even looked at the Ichimoku cloud, was, if I just am going to, it was when Bitcoin came back into this range. And I remember I didn't use this system at this time, so this is very much sort of hindsight, but I bought in here, and based on the cloud, I then sold when it re-entered back into the range. And a lot of sort of what I was exposed to in Trader Mercury's group, his sort of analysis fitted along those lines, and it fitted with the Ichimoku cloud. And I was like, I kind of like this system that, although there is some discrepancy in taking trades or not, but there are definitive triggers. And a very sort of screenshot that I have saved from the Ichimoku clouds was that there are definitive long and short signals. So I started thinking about almost developing a system where it's either a yes or a no. And that's sort of why I don't spend much time checking the charts, because if I check the chart and there is no trigger, for me, there's just nothing else to do. I am like, okay, cool, I'm done. I will wait till the next 12-hour close and we will see. And a lot of that came from reading an interview. Oh, that image is way too big. About the turtle traders and how they turned your regular person into successful traders. And a lot of that was just based on signals. So I have sort of written down my entry triggers, and it's I will use moving averages now. So price being either above or within a cloud is a good thing. So I have no interest right now in Bitcoin, zero interest. I have no FOMO. I have absolutely nothing, because price is nowhere. To me, price is just, if it comes into this kind of region, I can start thinking about a trend, and I can start thinking about catching some sort of trend. I have no interest in buying a bottom. I have really no interest in selling a top. And just knowing that saves me so much mental hassle, and really saving me on that FOMO. And
one thing we should clarify, Hen, is that you are a long only trader. So you're only looking for bullish setups. So obviously 100%. People could short, but Hen is not shorting.
Hen does not short. And so for me, moving averages were great. But when I back tested it, it would get chopped up occasionally. And I think a lot of people can see that in moving averages, and they do display things really well. The thing that I think, I suppose, separates my cloud from others is I use the super trend as well. And I think as a
Can you just explain what these are? So you mentioned super trend and Hull are part of this. Can you just for the layman what super trend and what Hull are?
Oh, I mean, I don't think I really know exactly. But the Hull is the Hull moving average is something that a guy called with the name Hull has developed, and it is a much smoother moving average compared to something like the simple or exponential. And a lot of it just developed by seeing other people use it, and to me it looked much more peaceful in a way, looking at a chart with the Hull. It's less jaggedy. These are all like make me sound like such a like a snake oil salesman, but it just doesn't seem to get chopped up in its trending up and trending down. So you can obviously see that price chops around here, but the trajectory of the trend is another thing that is important to me. So it doesn't have that like yes no kind of thing. There's usually always some sort of gap in between changing of, are we bullish, are we bearish? It minimizes that chop for me. And the super trend for me is a trend indicator that is very good at expressing volatility. So, but the other thing that is important for me is that the super trend is a definitive trigger. So there's so many times that a moving average gets chopped up. And for me, it was, do I take that? Is that a trigger for me? Is that actionable? Is that not? But a super trend is yes or no. There is no second guessing for that. So I started introducing that because I always thought, okay, well, what if price reclaims a moving average or price loses a moving average? And for that point in time, I don't do anything about it. I am expecting price to go up or price to go down. But then if price hits the super trend, that is a definitive action for me. I have to do something. I have to take note of the chart, and I either am taking the trade or I am not taking the trade. And the use of the super trend around the moving average has really helped me develop more confidence, I suppose, through my experience with using the system in those triggers. So there's a couple really good ones that you can just see on the chart right now. But where's my mouse? Any super trend that is above the moving average, that is, I am in. No matter what, I am taking that trade.
And that's blue. So just for everyone, when you say super trend above moving average, the super trend is the exponential moving average, and I guess the Hull is the simple moving average. So when it flips,
so actually
it becomes blue.
the flowy line is just your Hull. This is the super trend, and then the color is purely based on the trajectory of the Hull. So that is where I have taken code from someone else's indicator and gone, okay, well, if the Hull is moving up and the trajectory is moving up, angle is above 1 is the like coding way of doing it. It is blue. As soon as it gets below 0 and angle is down, the trajectory is down, it is gray. It's just sort of a third way of looking at that indicator for me. that may or may not be helpful. I find it helpful just as a visual person, but it also helps me avoid some things that a super trend may be what I would consider like a false signal. So, for example, here in September, Bitcoin's trending up, but we get this super trend sell above the moving average, or while the moving average is still trending upwards. So I'm not good enough at coding, but I know that this kind of sell signal when the super trend is above the moving average means nothing to me. That is a no trigger. I have to wait until there is a loss, say, of the higher time frame trend or market structure for that to be actionable. Because all this has told me is that we are still trending upwards, but this move was maybe a little bit more volatile, and we're now just returning back to the trend. Similar to Bitcoin, really for the Trump pump, we can see that Bitcoin was trending downwards, but with a super trend buy that is 1, below the moving average, and 2, with the moving average trending down. That is just telling me that it's almost like a reversion to the mean. So in essence, I would almost see this as like a buy the dip kind of opportunity. And if I was to short, you could almost think of this as like a shorting opportunity, because it is what I would consider a much cleaner trigger for a reversion to the mean, but you are still expecting the trends to continue downwards. And the inclusion of that moving average and the super trend into a cloud is what has really helped me, rather than just using each individually.
The price action that you're talking about in September down in the bottom left, why does the cloud flip? Like the bar is jutting, it's a thrust candle up, and then the cloud goes negative. Is that just because it's picking up the trailing data and there was a very bearish run down beforehand?
This here? Is my mouse visible?
I don't know if we can see your mouse.
Okay, let me try and draw.
Oh, there we go.
Do you mean this here?
Yeah. Why does the there's price action up, but then the whole gray box goes down?
So that's the super trend. So the super trend itself basically sets my stop losses. So this would be your like entry trigger for a super trend. But as soon as that flips, if you look at the super trend itself, it then sets your like bottom level for what your sort of loss of the super trend would be. So that is just the volatility that it takes into account at that time. That's the only reason that it flips, is because if you just put the super trend on, it takes that, and it's sort of similar here, where it then flips back down, and that turns into my stop loss effectively. And that was the other thing that I liked about the super trend, was that it took a lot of the thinking out of it for me. I just respond to the system. I just am the monkey pressing the buttons. I do some thinking, but a lot of that is set up for me just with that system, and really helped me just basically turn my brain off for a lot of the times.
So you are buying the breakout. So you are a breakout trader.
In a way that I'm also buying the dip if it happens, or here as well, and adding to the position. So for me, like this probably whole period here, I would maybe have 2 to 3 buys with maybe an average of sort of this price range. And reading I think it was in the Turtle Traders book, and there was a quote that always stuck with me that effectively said, like, your entry really doesn't matter. It is how you manage the trade going forward that will determine whether it's successful or not. And that has really that's one of the few quotes that has stuck with me and made me I suppose, unafraid of buying those breakouts because my risk management and system is also geared towards I will add more if it dips down and is still within the super trend or the cloud or things are looking bullish. So I suppose, yes, breakout entry. But I will basically, and sort of very going back to the Ansem tweet, is that I will accumulate in S1, I think, is the, rather than sort of finding. My goal really, and you can kind of like overlay it. I have the bigger chart, but even here, so I would probably, if this was the chart, I would end up buying here, and then I would be adding here and maybe here for this sort of price, and then just look to manage the trade and ride it upwards. And it's seemingly been successful so far. So probably the best trade of the cycle would have been buying and accumulating Solana at about low 20s.
Wow.
And then those lines are going to come back, which is annoying. Yeah, buying and accumulating Solana at about low 20s, and then I think selling around hundreds, 180, and then sort of in this kind of region around here. And then not looking back. I haven't traded Solana since.